one thing to note is that the investment time frame, people often think that their investment time frame is their retirement date. So if they're retiring when they're 65, for example, and they're currently 55, they think their their investment time frame is 10 years, from 55 to 65 years of age. But generally, people are using their savings, their retirement assets, to support them throughout their retirement. And somebody who is currently 65 years of age has got a life expectancy well into their 80s, so 20 plus, potentially 30 or more years. So somebody who is retiring now is not it doesn't stop investing at that point in time, but they've got to continue to invest for the next 20 odd years. So we start from our first job. We've got 30 or 40 years to retirement, plus another 20 or 30 years in retirement, and that tends to be increasing each year. So we've got between 50 and 70 years to invest. And so when you think about your investment time frame, don't just think it's my retirement age. The other thing to consider in terms of investment time frame is when you can access your superannuation money, because somebody who's reached 55 years of age has reached their preservation age and can start to utilise their superannuation money. So if that's your particular situation, you might consider the fact that you might be drawing some money out of your super, and therefore it's an appropriate time to potentially move to a lower risk option. Some people use their superannuation to help pay off their mortgage a bit quicker, and if you're looking at doing that in the next 12 months to 2 years, then starting to move some of your higher risk investments, so your growth type investments, back into more conservative investments with the idea that you're going to use it for some purpose, whether that's paying the mortgage or some other purpose, that's a reasonable thing to do. So when you can access your superannuation money and how far off that is in investment time frame, and therefore how you would invest the funds. And as I mentioned earlier, your retirement age is not your investment time frame.